If we do get a recession, which I do believe that we will be in a recession at some time in the second half of this year, as the metrics are continuing to show, I do think that you will see Bitcoin below 50 and 49,000 back to 30 to 32. But for the most part, I do think that we're closer to the highs right now, at least in this portion of the cycle. I think the only chance you have here is the hype of the halving. And if the halving if we can get to the halving without a major market correction, then we could go a little higher. Other than that, I think once the halving's over, you get a correction just based on the hype. I mean, think about it. We've gone from spot ETF to halving. What's next? What's the next narrative that they're going to spin?
Gareth Soloway, Chief Market Strategist at VerifiedInvesting.com, analyzes Bitcoin's technical aspects and forecasts its future. He also delves into the stories shaping their upcoming movements. On Tuesday morning, Bitcoin briefly reached an all-time high price of $69,210. It fell later that afternoon, but hovered above $66,000 on Wednesday. The new record had been a long time coming. It's been over 2 years since the cryptocurrency reached its previous high of around $68,982 on November 10, 2021. While Bitcoin is climbing again today, no one can predict which way the price will ultimately head. Of course, not all crypto market observers see nothing but blue skies ahead for Bitcoin. In a statement emailed to Investopedia, John Glover, Chief Investment Officer at digital assets financial services company Ledden, said, "Things always look bullish at the peak. I originally called for this move higher when we were down in the low $30,000, but I expected this to top out in the mid to high $50,000 region." And Glover is not alone. Analysts at JP Morgan indicated that Bitcoin could fall to around $42,000 following the halving event. Soloway identifies critical support levels, with the 49,000 to 50,000 range being a significant support level due to its previous role as resistance turned support after the breakout above 49,000. Major U.S. indexes closed lower Tuesday, extending their declines from a day earlier. The pullback comes after a rally that has sent the S&P 500 to multiple records this year. Looking ahead, Soloway cautions about potential scenarios where the stock market experiences significant corrections, which could lead Bitcoin to revisit lower price ranges, possibly even down to 15,000 to 20,000 in extreme cases reminiscent of the Great Recession. Come along, as we have a few clips we'd like to share with you. Before we start, remember to subscribe to the channel and click the bell icon to stay informed about our newest content updates.
What you saw was this culmination of greed, right? And again, people chasing a move that was already up. I mean, just looking at the last week, we're up from 50,000. We got that breakout above the spot ETF level of 49,000, and the momentum of that carried it up to this all-time high. But it's also known as a technical double top. And at double top, there's notoriously going to be players that are selling into that level or shorting it. And when you get to this point of euphoria, it gets every last buyer in so that when those sellers and shorters start pounding it down, there's no one left to buy. And that's where you get these dramatic drops. In addition, it's accelerated by the leverage in the crypto markets, right? I mean, in the stock market, you can play 2-to-1. 2-to-1 leverage is what an overnight investor can hold in a regular account. In crypto, it can be up to 100. It can be higher than that. And that creates these pockets where when flushes occur, you get these massive moves to the downside. And I would just like to say this is that if you want the mom and pops that are not in, the people that people hope start to buy into, the pension funds to buy into Bitcoin, you can't have intraday moves of 10 to 15%. They do not want to be involved in that. So this type of move is not healthy for crypto. First off, we have to be aware that the double top is the double top. So on a technical basis, until we really clear that, and a pierce intraday doesn't matter so much. So it's obviously we pierced it. It kind of stopped out a lot of people that probably had their stops right at 69,000, that former high. We pierced it, and then you saw the flush back down. Now, if we can establish ourselves over 69,000, I do think you have a shot at 100,000 here on Bitcoin. But again, it's a big if. It has to be if risk stays in play, essentially. Meaning that if we start seeing the Fed not going to cut rates, if we start to see less liquidity in the system because they're doing away with some of these bank funding programs, that's going to hurt Bitcoin just like the stock market. So just purely based on the charts, if we get a significant pullback here in Bitcoin, the 49 to 50,000 level is now major support. So again, that would be just your run-of-the-mill correction. And the reason that's significant is because that was the previous spot ETF high. So we ran up to 49, we pulled back, like you said, to the high 30s, and then we went up and broke out. So resistance, once we broke above 49, resistance becomes technical support. So on the way down now, 49 to 50 becomes huge support. Now, I will say this. If the stock market begins to crumble, let's say all of a sudden it becomes a risk-off environment, then we most likely will go down to that 30 to 32,000 level.
Right. Okay, but for now, you're ready to call a strong bottom at 49.50 or a strong level
as
of
long
support.
as the stock market stays strong, which again is all tied to liquidity from our good old-fashioned government printing money, and I know we'll get into that, and the Federal Reserve, then to be honest, pullbacks are buying opportunities in Bitcoin, and 49 to 50 is a major support. So I think honestly, if we see the NASDAQ and the S&P continue to make new all-time highs, the pullbacks will be unbelievably small. Like today, honestly, the low, if we see another new all-time high in the next couple days in the S&P, today's low is probably the low, and we're going above that 69,000 level. It's only if we start to see a little breakdown. So like a 10% correction in the stock market, that takes us back to 49 to 50,000. We get a 30% correction in the stock market, we're back to 30 to 32,000. A 50% correction in the stock market, a la, something like the Great Recession, now you're talking about potentially revisiting the 15 to 20,000 range. So that is a possibility. But again, think about the environment. We've been programmed, the Fed has programmed that they will be always there to inject some good old-fashioned drugs into the markets to just get this market going. If we see inflation not coming down any further and it starts to uptick and we go into a recession, what's the Fed going to do? They can't do anything. I mean, yeah, they'll print, but you know what it's going to do? It's going to spike inflation back north of 9%, probably to 15%. And there's going to be a whole new catastrophic situation, right? Probably even stagflation.
The development signals the U.S. markets are bouncing back more muscular, with stocks remaining in the green for over a week. The stock markets are delivering better returns this year in 2024, after remaining in the bearish territory for 12 months. The S&P 500 index reached an all-time high of 5,149 on Monday, retracing to 5,130 at the day's end. On the other hand, the Dow Jones Industrial Average reached a new high of 39,282 simultaneously, but retracted to 38,989 at the trade's end. Stocks rose Wednesday, with the market turning a corner following back-to-back losing sessions on Wall Street. The S&P 500 added 0.51%, while the Nasdaq Composite gained 0.58%. Soloway foresees a 50% pullback in the S&P 500. He notes the Nasdaq's 67% surge since October 2022, suggesting a 50% correction could return it to that level, a scenario he finds plausible based on current trends. Now, let's direct our attention to a video.
Is it likely that you are anticipating a 50% pullback in the S&P 500?
I do think, yeah, absolutely. In fact, think about this. The NASDAQ is up just from the October 2022 lows. What is it up, 67%? So, I mean, just a 50% correction takes us back to that level about. I mean, it's not that outlandish to think that if, and again, keep in mind, we're slowly losing. Like if you look at the Magnificent Seven, one by one, they're dropping off the cliff. Apple's dropped off the cliff and it's had a major breakdown. We've seen even Microsoft now today was down significantly just after making new all-time highs. Tesla's getting crushed over the last 12 months. And so slowly these stocks are starting to collapse. Then we look at all the sectors. Out of the 11 sectors of the S&P 500, there's only one sector that has made a new all-time high. So the pieces of the puzzle of something bigger are there. It's being masked by liquidity that supposedly the Fed was supposed to suck out, and they didn't, with these loan programs, emergency loan programs to the banks and all these other things. And then you also have the government that's making up for the balance sheet. And again, this is another amazing stat. The Fed balance sheet's gone down by $1.5 trillion. That's it. The U.S. deficit in that same time has added like 6 to 7 trillion. And you have to understand, people, when we borrow money from other countries, the U.S. is spending that money, which is stimulating the economy. And so it's just pumping more and more liquidity into the system. So you're right. This is a long picture thing, as we don't know when it's going to happen, but we are a lot closer than people realize, inclusive of a 100-year cycle. I don't want to get into cycle work at this point too much because it gets a little bit more complex, but think about COVID, think about Spanish flu, 100-year cycle. We're coming right up to the Great Depression 100-year cycle as well. But my thesis is that you have government spending that just keeps going up. I mean, every, $1 trillion, every 100 days added to the national debt. How long is that sustainable? Now, if rates are staying, let's say now they're projecting rates on the Fed funds watch tool, it's only going to be in a year, it's going to be down to about 4%. Okay, so now you're refinancing all the US debt that's coming due at 4% versus at 1 or 2% where it was. I mean, there's massive spending that is going to have to continue. And the only way the government gets control of that is by basically doing austerity, which is what they did in Europe back, I think it was like the 2013, 2015 period. And to do that, you're going to force the U.S. into a horrendous recession. So pick your poison. It's either the U.S. debt is going to continue to soar towards 100 trillion, or we can go into basically what's close to a Great Depression.
Bitcoin continued its rally yesterday, breaking through the $69,000 barrier and setting a new all-time high. The leading cryptocurrency has gained almost 60% since the start of the year, per CoinMarketCap data. Its rise has been fueled by the SEC's approval of a spot Bitcoin ETF and the upcoming Bitcoin halving. Experts warn that Bitcoin's impressive rally makes it more volatile. It may skyrocket, but it won't necessarily stay high. What is your stance? Feel free to share your thoughts in the comments. If you found this content helpful, give it a thumbs up. And remember to subscribe to stay updated. Thank you for being a part of this journey with us.